today on my investing strategy for cryptocurrencies. So I'll just show you some insider tips that I have learned from other people. So most people just follow the prices of things, uh, but this is a fallacious ideology because basically prices don't represent what's actually happening in the market. So what the thing to look at is the market cap of whatever you're looking at. Excuse my VPN here in Albania. So I don't want to waste too much of your time, but so here we have Bitcoin and we have Ether. And Ether is doing well, right? In the last 24 hours, Bitcoin's kind of floundering. And what I've noticed is that a very obvious trend that most people don't even know. Most people don't, I haven't seen many people talk about it, at least in the financial mainstream. That is Ethereum and Bitcoin together compared to one another. And the patterns that play out between these two assets are that Bitcoin goes up and then Ethereum goes up. Ethereum and Bitcoin are relatively they're relatively the same kind of an asset, a digital security, store of value. Ethereum, most people just invest in one or the other or both. But people who are interested in maximizing their profit during these bull runs might do good to look at the Ethereum Bitcoin chart, because as you can tell, it follows some clear patterns here. And wedge patterns typically indicate that it's going to break out. So I predict that Ethereum will break out of this. So this is Ethereum relative to Bitcoin. So Ethereum goes up here. So basically, at this time, if you have a lot of Bitcoin, this is not financial advice or whatever, all that stuff, but a wise move. Let's see. You can leverage your gains in Bitcoin by flipping it into Ethereum and actually trading straight across. So you're not ever converting into cash. You're just swapping one asset for another, Bitcoin to Ethereum. So let's look at the historical data here. And you can people also program bots. A lot of this stuff is bots because you can program bots. So look at the ratio here. This is what Ethereum to Bitcoin was. There's 0.15. Right now we're at 0.06. So you could get a ×3 leverage on your gains if you play it out properly. Assuming that the same kind of super cycle takes place, which I predict is very likely to happen because Ethereum is moving to proof of stake and Bitcoin is proof of work. And the reason the market crashed was because Elon Musk said he didn't like Bitcoin because it's not using clean renewable energy, and proof of stake does not use that much energy. It uses hardly any energy at all. So currencies that are energy efficient are going to be touted as the choice. So we have Ethereum, and then we also have Cardano, ADA, and Polkadot. So the cycle typically goes, Bitcoin goes up, people roll their gains into Ethereum, and then Ethereum goes up, and people roll their gains into third tier cryptocurrencies like ADA and Polkadot, and then back into Bitcoin. So there's a three-tier kind of system that is all built into crypto, and you don't ever have to convert it into dollars. You just trade straight across assets. I'm sure many traders know about the stuff, but of course, the break is always going back into US dollar coin or some other digital security like DAI or God forbid Tether. So just consider these alternative strategies. And if you're looking to make a bot, there's actually a guy who shows you how to make bots. There's a lot of people who make bots, but there's one guy who's super, super good. What was his name? Part-Time Larry, that's his name. Part-Time Larry. He is super in-depth with his bots, and he's just an amazing coder. Whether or not it's ethical is up to you. I suppose these could be used for ethical or unethical purposes, but it is not my business. So how do I want to conclude this video? Well, I'll show you one last metric. So the MVRV score for Bitcoin is a measure of how hot or cold the market is. It shows you how much money people are in profit with it, whether if they're not in profit, they're probably just holding on to it. And if they're in profit, they are probably gonna take some profit. They're more likely to. So here we have, that's the market cap minus the realized cap. Realized cap's like profit divided by a standard deviation of what the average market cap is. Statistical average of the market cap, I suppose. So here we have pretty clear correlations. I think I've showed this video before, but it's very clear that the z-score is here in red, and as it gets into this territory, it pretty obviously facilitates a crash. And so we're all the way down here. The market's pretty cool. If it keeps going down like here, then we have, this is another 3 years, but I highly doubt it will do that because the market is based on supply and demand. And just like gold, of course, the narrative is it's digital gold and it could be more or less accurate. But you can see there's a halving, and a halving means that it becomes twice as hard to mine Bitcoin. So that means that the scarcity factor increases by 2. So whereas it was hard here, it gets twice as hard. Boom. Now it gets 4 times as hard. Now it gets 8 times as hard. Then it gets 16 times as hard. So that is that increases the difficulty for miners to mine it, increases the scarcity on the marketplace, and increases the price. So he built that in, the inventor of Bitcoin built that in to incentivize mining throughout the entirety of Bitcoin, because it will always get exponentially harder and harder to the point of infinity, which means that you'll be able to mine less and less Bitcoin if you're a miner, but the price, assuming that it's still worth something, will be high enough to the point where it's still foreseeably profitable, even if you're mining a very, very small amount of Bitcoin. So as you can see, each time a halvening happens, they call it a halvening, it sparks off a bull market because there's scarcity in the markets relative to the amount of asset already on the market. If you want to accumulate more Bitcoin, you either have to invest in a lot of miners, a lot of electricity, or basically time these halvenings at the right time and invest. So this is showing you where we're at now, where it says we were in this cheap stage. Now we're in hodl stage. So yeah, this has just been a quick little tutorial on how to make money using Bitcoin and Ethereum and the relative ratios. This is probably the most important chart, the relative ratio chart. And you can really have your finger on the button and predict more or less where it's going to go. And I don't know if this is necessarily like ethical cheating but it is, I suppose, technical analysis. But moreover, it's just reading patterns in nature or just mankind. What are the patterns of human psychology? What is an efficient way of accounting for goods, services? And I think Bitcoin and Ethereum are just representations of this new kind of currency that we're experimenting with that is abstract and basically based on a Platonic idea of perfection, of the perfect money, of money that is perfect, perfectly scarce, perfectly dividable, and universally transferable and accessible and secure. So same thing that computers have done for printing press, basically making books, kind of a antiquity. It appears that digital currencies could potentially do the same thing to government fiat currency. And gold. Although gold is a little different, gold has its own kind of financial policy. Gold is kind of arbitrarily valuable, just like Bitcoin. And I suppose you could say gold, there's gold in electronics, there's demand for gold, etc. But there's actually more demand for silver. But gold is still very high in price. And so Bitcoin is, it's kind of like gold. It's kind of like there's a store value. Jack Dorsey is putting it into Twitter. We have, you can spend it at Square. And it's a community of people who are investing in a new form of money, basically. So invest at your own risk and do your own research. And thank you for watching. Okay, bye-bye.